Hey everybody, how are you doing today? So today we are going to have a home buying seminar, and the focus of the home buying seminar is really to highlight how mortgages and real estate agents are going to really make the difference when you're looking to purchase your home or an investment property. And so we're going to dive right into it by introducing some of the panelists that are going to be speaking today during the seminar. And so
I love moving people into their homes. It's more of an emotional adventure for me, and that's why I'm so drawn to this industry. It's just it's great being able to provide that for a lot of the home buyers. And I'm a buyer specialist as well, but being able to see people's happy faces as they move into their new homes, that's that's the drive for me for sure.
definitely priceless.
Definitely.
All right. Thank you, Nathan and Emily.
Hey everyone, I'm Emily. I'm a leasing and sales agent as well, alongside Nathan and Letty. I also love working with buyers. I've gone through my own real estate journey and done some renovations here and there. So yeah, I just love everything real estate, but buyers are my bread and butter. So
All right. And last but not least, Letty. Letty, I think you might be on mute still.
Thank you. Hi, everyone. I'm Letty, and I'm a leasing and sales associate at KIOP. Although I've relatively just joined the team, I've been in corporate relocation and helping employees relocate globally for over a decade. I've also had experience with home buying and really enjoy finding properties with great value and a good return on investment. So I'm super excited to share with you later during the presentation what we're seeing with condos in the Bay Area.
Fantastic. All right. So thank you, panelists. Very much appreciate each of you taking time out of your busy days to be able to share valuable information for potential home buyers in this, what would some say is a very challenging environment. And so let's get started. Right. So one other thing, as you guys have questions, don't hesitate to click on the Q&A and send over questions. As they come in, we will monitor for the questions and we will be able to address them at the appropriate time, either in between certain sections of the webinar or at the very end as well. Okay. First and foremost, what we're going to do is we're going to cover a number of topics. They are listed above: basics of home ownership, condos in the current market, mortgage process, and the down payment loan assistance program. Now, I'm going to highlight a couple things that are going to be really key takeaways for anybody really looking to purchase a home. And that is really, why do you want to purchase a home? What is the value in purchasing a home? And why has it been a long standard for a lot of people that are trying to achieve that American dream or trying to coin the phrase, build wealth through real estate. So Nathan is going to dive into that. As we dive into that and learn more about that, we're going to slowly transition over to understanding the condo market and why the condo market might be the perfect place at this point in time to be able to enter the real estate market as a first-time home buyer or as a seasoned investor, because there's a lot of opportunity there. And Letty will be able to explain that a little bit further. Mortgages, as I mentioned earlier, financing is key to being able to purchase anything, and understanding how the mortgage market is looking right now, what we expect to see in the next few years, and what opportunities that you might have currently to purchase something using financing. That is something that Don is going to dive into as well. The last but not least is a goodie, and it's the down payment loan assistance program. And what I will share with you is that there is money out there that is going to be interest-free and no requirement of payments until you actually sell your home in the future. And so if you want to learn more about how to get access to that money and that type of help in purchasing a home, then Emily's going to be the best person to talk about that as well. Okay. So Nathan, tell me, why should somebody want to buy a home? Why is it important?
Yeah, definitely. Thanks, Lawrence. So, I mean, basics of home ownership, we're just going to be talking, I'll touch base with all of these topics up here on the screen. So answering questions on like, what is home ownership, right? Why is it so important? What different types of home ownerships that you can pursue? And then some of the common misconceptions about home ownerships, or some myths that are kind of holding you back from, pulling the trigger and making financial plans on, purchasing your home. So basically, home ownership, it's a lot of you guys here are curious about how you can achieve that goal. It is, a lot of people will agree it is, the American dream, right? In order to own your own home, it's gonna be one of the biggest purchases that an investment that you're gonna make in your lifetime. And I think the most important thing about home ownership, and a lot of people do realize too, is just building that equity, right? And then building that equity into something that you can fully own in the future and reap the benefits of that equity, which is largely, appreciation of a property. And then that's what we're seeing with a lot of the longtime homeowners, that they are reaping the benefits of tapping into that appreciation. So that, I think, would be one of the most important things about home ownership, and that's why a lot of people are interested into that. Also, because renting versus owning, right? So renting, you are basically, paying someone else's mortgage, and you are, putting money, a large amount of money, especially in the Bay Area and specifically in San Francisco, where rent is very high. You're putting a lot of your hard-earned money into, paying for someone else's property, and you're not really receiving any benefits in the long term. And I want to acknowledge too that home prices are not going to get cheaper. If we take a look at the data and the graphs, right? And a lot of people know that, home prices decades ago are a lot cheaper than how they were now. And there's a general trend of, increasing home prices every single year. And I'll touch base on that in a graph that I'll explain a little bit after this slide. But there is a disparity between the increase in wages and the home prices. A lot of people know that, and are feeling it as well. Our parents, right, were able to earn wages that were able to afford the prices of the home back in the days. But for now, a lot of the general population, and then the younger population as well, are experiencing that, the home prices are less affordable now with the current wages, and the gaps between, the increase in inflation with the home prices do not meet the inflation or increase in the living wages. So as we are going in the future, it's just going to be a little bit, there's going to be more, it's going to be more and more harder to be able to afford a home. So that's why it's a great time to always think about, purchasing a home as soon as you can and start making those plans. Because we are expecting, kind of that gap to get wider and wider as the years go by. There is also rising rent each year as well. So a lot of people, and as a leasing manager, I always speak with residents all the time. Why are you guys moving out, right? Like, what's prompting the move? And a lot of the renters are complaining about rent increases. So usually they're getting into, they're renting from buildings that have little to no rent control. And they're, complaining about 10% increases, stuff like that. So every year, landlords are allowed to increase your rent by a certain amount based on the building construction and the allowable increase. But you have to take that into account because, if you're still renting 10 years from now, you're going to have to pay whatever the market value is for that rent price. And it's just going to be increasing every year or so. Versus when you are owning a home, you are, depending on what type of mortgage product you sign up for, but you're basically kind of locked in with that, the interest rate and the mortgage payments for maybe up to 30 years or 15 years or whatever the product that you choose. So it's that's why it's very important, and a lot of people are chasing to be able to have those benefits, right? With the rent increases too, if you are renting a condo, just note that there's no rent caps on those as well. So the landlords can theoretically or technically increase the rent whatever they want. There are some other rent control options as well, such as like California rent control, which is very popular. It's most of the properties out there that's going to be capped up to 10%, but 10% in California and especially in the Bay Area is a considerable amount to be worried about each year, right? So that's why it's such a a con with renting properties or renting, and especially for like 10 years from now, it's going to be a drastic change in the rent prices, and like I said, the wage gap and the home affordability gap is going to increase every single year. Another con of renting your space is that there's no say in modifying your place, right? Because when you're renting a home, it feels like home. That's what you're going to be calling home for at least, maybe a year, a couple of years or so. But you're not usually allowed to modify the space, not changing appliances, um, building certain things inside the home. You don't really have a say in how you want to build out or live inside your home. So that's another con with continue to rent, your property for right now. And then another thing too is that the mortgage rates are continuing to rise. And I've talked to some professionals as well, and they're expected right now it's about like 7%. And then Donna can actually dive into the details of what the projected interest rates are. But some professionals are even expected to see the interest rates rise even higher. And then historically, this has not been the highest that interest rates have been seen or observed, right? Like I think we saw about 18% in 1980s as well. Not saying that's going to get there, but there is a trend before that we've seen interest rates rise up to. And very popular, I think like a very popular strategy that people are taking a look now is kind of just locking in the current interest rates before they rise in higher, and then look into refinancing options later. Because what you can do right now, it's there's less demand because a lot of the buyers are waiting in the sidelines, and because of the low demand, the pricing is a little bit, what we're seeing is a little bit lower than expected. So the benefits of buying now is that you're able to lock in the interest rates, buy a property at a lower price point. You don't have to deal with a lot of competition as that San Francisco usually sees, right, with real estate. So it's, there's pros and cons. So it's whatever works with your situation, right? But that's a large benefit of purchasing properties now. There's also tax benefits and deductions with home ownerships as well that will save you money. So definitely overall, there's a lot of benefits with home ownerships, and it's great for people to start, if you haven't before, start making the financial plans, talk to financial advisor. Donna's a great person to go to in order to really pull out the numbers and then see what you're able to afford, how much you need to like save up for. But yeah, she'll be able to provide all of those details for you. So the different types of home ownerships that people typically tend to look for is that there's like full ownerships and then fractional ownerships as well. And a lot of the first-time home buyers, renters that we see, they're gravitating towards something of less responsibility. Single-family homes require a lot of responsibility. They're still very popular with home purchases, but you do have to tend to, everything inside the lot that you bought, right? Like the roof, you have to service the roof, outside maintenance, including interior maintenance as well. So there is a lot of responsibility, but it's, the benefits is you do get that large space all to yourself. A lot of the first-time home buyers that we experience gravitate towards condos because they offer a little bit less responsibility. You're basically owning an individual unit while sharing, a split ownership with the common areas. But what's great is that you're responsible for, maintaining inside. Usually, in most cases, you're responsible for maintaining inside your home or your unit, but the HOA covers, exterior maintenance inside around the building. And that's why it's very popular, because it is less responsibility. Usually it's more like cheaper in the home prices as well. And that's why a lot of people gravitate towards those options as well. TICs are another thing too that are becoming very popular with San Francisco. It stands for tenancy in common, but basically it's usually prevalent with the lower unit properties, but basically you are owning a fractional interest of the entire property, but you're assigned a specific units. And it's very similar to condos. And there are lenders that don't do TIC lending, but we have all that information and resources in order to provide and direct you to the right professionals to do that. That's the only downside, but the benefits is that it's usually a little bit cheaper as well in the home market. That's what we're seeing with TICs. So great option as well for types of home ownerships that you might look for. And some common misconceptions about home ownership is that you need to be a tech millionaire to buy a home. Buying a home is unaffordable. You need perfect credit. You need like a large down payment, etc. But those things are not necessarily true. There's different types of properties that you can purchase, right? It's you don't have to purchase in San Francisco where the home prices are very high, right? There's other areas in the Bay that offer more affordable home prices. And your first home does not need to be the perfect home, right? It's based back to what I'm saying before, right? It's the most important thing is just starting to build equity and just gradually, and you can always upgrade into a larger home or a better home for you. But it's basically just purchasing a home now, start building equity, and then move on and upgrade. And you have multiple different options for you in the future if you want to sell, if you want to take a look into other financial avenues in order to reap the benefits of home ownerships. The options are endless. And there are different types of properties as well for home affordabilities. There's such things as BMR, so below market rate properties. They do have some specific requirements such as like income caps, but those are available, and the government does a pretty good job at trying to find ways and programs in order to make homes more available for homeowners and first-time homeowners as well. So we have a lot of those programs and resources available and can recommend those to you guys as well. In regards to like FHA loans and regarding to down payments and also credit scores as well, there's such things as FHA loans, which require like 3%, 3.5% minimum down and a 580 credit score. minimum credit. So there are some options out there, and there's these misconceptions that usually hold people back from making financial plans or jumping on making a home purchase. But there's a lot of ways that that we can navigate through that. And if we can move over to the next slide, slide, please. And so for this graph over here, and this is provided by Keeping Current Matters, but this just kind of proves about the home appreciation over the years. What we're seeing over here on the left side is that there's about a 56.1% national average in home appreciation in the past 5 years, and they're separated into different regions to portray like the different types of markets. But overall, on average, is about 56.1%, which is it's a considerable increase in home appreciation and value. On the other hand, we took a look at the past 30 years from 1991, and on a national average, they have increased for about 290%, which is amazing. People are paying very low mortgages for their properties, and the living wages has increased, and they're reaping the benefits of that because they decided to purchase earlier on and then have the home appreciate. So that just goes to show you why home ownership is so important, and then why everyone deserves the right to own a home, right? It's just the difficult part is, how do I get started? What do I need to do? But that's why we're here. We're here to guide you. We're here to lend professional advice. And so I wanted to transition over to Letty. So I want to acknowledge also that a lot of the home buyers or a lot of the audience members today are coming from first-time home buyers or currently renters right now, which my point previously do typically gravitate towards condos because there are lesser responsibilities and more affordable for a lot of people. So Letty's going to be explaining all about condos, what she's seeing on the market right now, and then, why they're a really good option for first-time home buyers.
Great. Thank you, Nathan. As Nathan shared, I'll be talking about the current market for condos, what this means for buyers, and the opportunities for buyers in this market. Let's start first with aligning on what a condo is. I know Nathan touched on it and shared some of the examples of what is included in a condo, but I thought, let's set the foundation so we're all talking about the same thing. So a condo is a housing or residential complex in which there are separate units, and each unit being owned by an individual. The condo owners are responsible for what goes on within their unit, which would include the maintenance and the repair. And usually there's a fee that's associated with condos, which is also known as the homeowners association fees. And these fees would go towards the cost of maintenance of shared common areas, such as a clubhouse, a dog park, or barbecue areas. And the common areas differ depending on the condo buildings that we're talking about, but those are some of the items that those fees would go towards. In terms of like building amenities, those vary as well. But you'll see that in San Francisco, there are amenities such as swimming pool, a fitness center, or a spa. The table that you see on this slide shows at a high-level summary the difference between a condo and a single-family home. When purchasing a condo, the ownership is of the actual unit versus for a single-family home, ownership is of the home property. You'll see that in both scenarios, mortgage and taxes apply. As mentioned, condos have an added cost, which is the homeowners association fee. Typically, the more amenities in common area, the higher the HOA fee. The benefits of purchasing a condo include added amenities, less upkeep, and affordability. So in addition to first-time home buyers, condos are a great choice for many people So for example, empty nesters. So those who have kids that have gone to college and they're looking to downsize because they don't need such maybe a huge property. So it's a great opportunity for them to downsize, and also for seniors who want less maintenance, where they can have a condo and really just take care of their in-unit and allow the home association to take care of the exterior and all the amenities, as well as the common areas, which we talked about earlier. Definitely condos are a great solution for first-time home buyers looking for a starter home, where the prices for single-family homes may be on the higher range. And then lastly, as Lawrence had said earlier on, condos can also be very attractive to investors. So if you like the idea of owning your own place while not having to mow a lawn, repair the roof, and have the convenience of, say, a gym or a swimming pool that's within a walking distance, easy access to a clubhouse to entertain, then maybe a condo is a great fit for you. Right now, what we're seeing for condos is that there is a downward trend in prices for condos, which creates a really good opportunity for buyers. The slide that you're seeing contains information and data supporting the claim that condo prices are on the decline. In downtown condos, we're seeing selling prices that were last seen in 2017. In April 2022, which was about a little bit over a year ago, for a typical condo in the downtown South of Market area, condo were selling for over $1 million. Fast forward this year in April 2023, what we're seeing as the median price is $941,500. So when we're looking at historical data, this is less than every past April since 2014. I think that's just a great data point to show that and justify that we are seeing a decline with condo prices. The vast majority of recent condo development is located in District 9, which covers the neighborhoods that you see here in this bullet point. And the point here is that prices in this district have been down about 9%, and the transactions have also been down 40% year over year. So what this means is that condos are staying on the market longer, which is an advantage to buyers. And then the median sales price in the downtown area has also dropped by 16% since 2021, compared to a 7% drop outside of the area. So what does this all mean? This means that there are condos selling in luxury developments at discount prices, and they're actually also lower than what the owner had paid for them several years ago. So the owners are putting their properties on the market and taking a loss. So some of these units, they have high ceilings, floor to ceiling and wall-to-wall windows, city views and plush amenities. And what's sold a couple years ago for over $1 million, now we're seeing that being sold for less than $1 million. Okay, we can go ahead and go on to the next slide. Okay, so this slide just shows the opportunities for buyer. Right now, what you're seeing on this slide are just the different types of condos throughout San Francisco. And it doesn't include all the neighborhoods or all the condos, but just wanted to give you a sample and idea of what we're seeing. So for example, when we look at Mission Bay, 250 to 260 King Street, I know that it's a little bit small in terms of the font size, but there are some really great opportunities there. What we're seeing is that units are being sold between a range of $70K to up to $250,000 less than what the list price is, and that's huge. We're also seeing that the days on market are longer. So the longer that those properties are on the market, we're seeing a steeper discount. And as I mentioned earlier, these owners are actually publishing or listing their properties at a lower price than what they purchased it for. So that's just to give you an idea of what's happening in the Mission Bay area. If you go down and look at 1945 Washington Street, there was a condo there that also sold below the list price. Not as significant as what I just shared for Mission Bay, because obviously depending on the neighborhood, the prices are different and the days on market are different as well. But also wanting to be realistic and share with you that we're not seeing, like a complete discount where it's like, oh, 70,000 across the board, but wanting to be realistic and share with you what we're seeing in the different neighborhoods. On the right-hand side, you'll see a condo at 685 20th Avenue. And that's an active property right now that's listed for 1.795 million. And in terms of square footage, you'll see that it's about $800 per square foot, which really represents a great deal, especially in the central Richmond district. Looking down at that last square for the Diamond Heights Village, you'll see that there are units there that have sold below the list price. And there's also another one that's active for about $750 per square feet. So again, just wanted to give you a sample and flavor of what's out there in the market in terms of what we're seeing for condos. Next slide. Okay, well, I wait for that slide to come up. So one of the things that I've heard from potential buyers, oh yes, this one. Yes, thank you. One of the common comments that I've heard from potential buyers at open houses is that they're just looking and not ready to buy yet. They're waiting for mortgage rates to drop or home prices to decline. And with that, rather than wait for the scenario to happen, which will ultimately increase demand and therefore create increased competition and cause property prices to soar, I put a second bullet point in there for us to think differently. So rather than wait for prices to decrease to purchase a dream home, potentially work with a real estate agent to take a look at the market and see, what is the best price that you can offer if you're really interested in a property. So you don't have to wait for the property price to drop itself. If you're working with a realtor and you understand what's happening in that market, and you're looking at what we call the CMA, the comparable market analysis, you and your agent can determine what is the best offer price with respect to the list price. So again, don't necessarily wait for that price to drop. You can be proactive and take a look at what's happening in the market and then determine what is the best offer price for that property. And then secondly, rather than wait for mortgage rates to drop, you can lock in on the purchase price now. And as you heard Nathan say earlier, you can refinance when mortgage rates are lower. And some other ideas, consider a larger down payment. And if you have, say, a retirement account, you may want to consult with your financial institution and a tax advisor on your home purchase plan to understand what are your options. You have the option to take out a significant amount of money from your retirement fund to contribute towards a larger down payment for your property. And then you want to also consider different mortgage options. So the takeaway on this slide is, be aggressive and create your own deal, because really right now is the opportunity for a buyer to go in and really shop for the condo that you want, because we're seeing that condos are staying on the market for a little bit longer. And the longer that the property is there, it works towards the buyer's advantage.
So Letty,
Okay,
are you seeing that sellers are negotiating with buyers? Are they willing to come down in price?
For 250 and 260 King Street, when we look at the comparable market analysis, we're seeing that about 78% of the properties are being sold less than the list price. And that's huge. So what you're seeing there is anywhere between 70,000 to about 250,000, where it's less than the list price. And when we look at the days on market, it's actually longer. So there is opportunity for negotiation, especially when the seller is really motivated to sell. Some cases we see that the owner has already moved and they're located in a different city and they want to be able to sell the property and be done with it. But they're looking for, reasonable, not someone, they're willing to negotiate and be reasonable.
So you talked about a theme. No, that makes perfect sense. You talked about a CMA earlier to determine what a good price point would be. Is that also what they use to determine what the list price should be?
Yes,
So
that. Mhm.
if that's the case, then it is a pretty quickly evolving market if the sellers and the agents out there that are trying to sell condos are listing things at certain price points and they're still staying on the market longer. So it
Mhm.
really is showing that there is a significant downward pressure on the condo market, creating opportunities. So it's good to
Letty,
know.
can I
Yeah.
ask, just for folks who don't know all of our acronyms, what is a CMA?
Yes, comparable market analysis. So that essentially is looking at properties that recently sold, and we look at 12 months, and we could take a look at, based on the property that the buyer is interested in. Say, for example, if they want to take a look at submitting an offer for a 2-bedroom, 2-bathroom, 1,000 square feet, we have access to data that will show us what are some of those recently sold properties in that area, so that we gain an understanding of what has recently sold and what compared to the list price, and what is a reasonable offer that a buyer can submit.
Thanks.
Yeah.
So if I was a buyer, I would think if the market is trending downward, why don't I just wait? Why don't I just wait till it bottoms out? Get the best deal possible.
Mm-hmm. So what you wouldn't know is if there are other people who are interested in the same property. So how motivated are you? Because if you're motivated and you really see something you like, you wait too long and that property will be gone. So that is why we recommend working with a realtor, because with a realtor, they can speak with the listing agent to get some additional information that you might not see when you're searching online. And that may be, hey, our owner is really motivated, or, if you're really interested, then you should submit that offer now. So those might be some insights that you may not be aware of, or you may not see when you're looking on the website, but that's information that realtors and a listing agent might have, just be with the communication and conversations that they.
So I'm looking at the slide and there's only a couple spots where I actually see a list price. Diamond Heights Village, 891,000. In general, I think a lot of people have always thought that it takes $1 million to buy into San Francisco. What's the cheapest you've seen for some condos out there in nicer areas in these luxury buildings?
Mm-hmm. So when we're talking about downtown, we've seen properties that have sold about 900,000, when once before they were selling for over $1 million. And that's like the very extreme end, the very luxurious condos. We're talking swimming pool, dog park, multiple gyms, clubhouse. I mean, it's quite beautiful with, city views. And then there's others that you see, like in Diamond Heights. You won't have all those same luxurious items that I just mentioned, but that is very affordable. I just took a look at one of those properties, and is currently listed at, I think, 891,000. And I think even that there's opportunity for negotiation. That property has been listed for some time with a very motivated seller. And it also, that one is actually a village, so that's a very, very nice community to be in.
And those
There's
are all
other.
those are 2 bedrooms as well. So I imagine 1 bedrooms would be cheaper.
Mm-hmm. Mm-hmm.
Okay.
Correct.
One on
So,
Washington Street, I think I remember seeing that one too, but I think that sold a little bit closer to 900K, which is great. It's right next to Lafayette Park, so it's great, great property, great location, but definitely under market value for when it was sold.
I think for a lot of first-time home buyers, they might not need a 2-bedroom. They might just want a 1-bedroom. Maybe a larger, spacious 1-bedroom, but they certainly might not need to spend 900,000. Certainly don't need to spend $1 million. Maybe they could find something a little bit farther south than that. But obviously, you do need a good realtor to do that, real estate agent to show you where the good deals are. So, but thank you. That was very helpful.
Yeah, absolutely. You're right. If you're looking at one bedroom, one bath, then that does bring the price point down. So this is my last slide. And really, I know that this is a heavy slide with a lot of data, but here what I was trying to illustrate is that you can be creative when it comes to thinking differently, right? Because what I hear a lot is, gosh, interest rates are 8%, and I'm not ready to commit to such a high percentage. So what this is trying to illustrate is, in a slower housing market right now for condos, if you have a purchase price, say of 950,000 with 20% down, then the first two columns shows you what your interest would be at the end of 5 years. So that's how much interest you would pay. So if you take a look at, say, 30 years at 8%, then at the end of 5 years, then you're paying about $292,000 for interest based on $950,000 property. Now, if you were in a competitive housing market, and we talked about condos being sold at over $1 million. So just taking that example, say if you were to purchase a condo for 1.065 million, and if you had a lower interest rate, let's just pretend that a 4% interest rate exists for 30 years, you'll see that at the end of 5 years is about 160,000. So when you look at just purely just the interest rate, you're thinking, oh yeah, why would I want to, purchase now at 8%? And so what I tried to illustrate below is, yeah, the interest rate is higher, but you lock in on a lower purchase price. So if you take a look at the numbers below where it says competitive housing market, and if you purchase at 1.065 million and compared to a slower housing market at 950, then your purchase price variance is about 115,000. And once you add in the interest, then it brings you to $275,000. So what that is saying is, if you were to get a lower interest when you purchase at a higher housing, when you purchase at a competitive housing market, then really you're paying 275,000 approximately. And if you compare that with the interest you're paying at 8%, it's kind of on the same ballpark. And I haven't added in, property tax, because when you're purchasing a property at a higher rate, then your property tax increases versus purchasing at 950, then you get a little bit of tax break there. So I try to illustrate that point, just trying to have you think differently, not just look at the interest rate, but look at it holistically, because you do have the opportunity to lock in on a lower cost when it comes to purchasing a property right now. And I tried to simplify it. And I know Donna will do a much better job at explaining this, but I just tried to simplify it and illustrate. And again, just trying to show you holistically to think that way. Okay, so
Yeah.
with that, I'm going to turn it back over to you, Lawrence.
All right, so it looks like we have the home buying process showing right here. And obviously the home buying process is quite involved, and there's a lot of different steps in the home buying process. And it's not something that you can actually do on your own, meaning you can't go out and write an offer on your own. You can't see certain properties that aren't available during open houses and specific public times. So a realtor is really important. What else is on there, Nathan, that would be good to point out?
No, definitely. Especially what you said, finding a professional that works well with you, that's very knowledgeable in the process and can guide you in the right direction. On top of that, you want to find someone that, matches your personality, right? And someone who you want to work with, because it is a stressful process. There's a lot of complexities in it, but you want someone with, for lack of a better word, with the right vibe, right? That matches well with your personality and will make the process fun for you. But for the interest of time, I think just if you guys want to take a picture of this process, it's very high level, but basically just talking with a professional. We'll introduce you to our to the lender as well. In this case, Donna is amazing. She does a great job with being able to provide you all the right information and guide you in the right directions. She'll be able to answer any lending questions that you have. But afterwards, getting like a pre-approval and finding exactly how much you can afford, what's your preferred monthly mortgage payments, some loan options and products that works well for you in the current the market condition right now. But everything else is, we'll be guiding you through the process, letting you know exactly what you need to do. Like Lauren said, you can't do it by yourself. It's just too complex. You definitely want to have someone, trust in someone to make the process fun and stress-free for you.
Right. Awesome. And Nathan did mention to screen capture. Don't worry about screen capturing. We will have this recorded and shared for you if you want to take a look at it later as well. So what else do we have coming up? And I know we're a little bit behind on time. So I think Donna's gonna talk a little bit more about mortgages and the financial instruments that allow us to be able to be homeowners.
Yes, I'm happy to do that. So we'll start with what kinds of mortgages are there. And conventionally, there are basically two types. There's fixed and there is adjustable. Adjustable meaning that the rate changes every month. But most products these days are what we call more of a hybrid adjustable, where based on a certain index, it's not like the lender wakes up on the day before the next month comes along and makes up a new rate. There's a certain calculation based on an index, and then it adjusts. Usually these days it's fixed for a certain period of time, and then it adjusts once and you have that new rate for a year. Let's dive into the application process. Mortgage approvals are based on three broad criteria: your income, your assets, and your credit score. And it's not just your score. With the credit report, we're looking at the score, but we're also looking at the existing debt and debt service, meaning the payments that you're making on the existing debt you have. Your income is important, obviously, because that's what drives what you can afford. And your assets tell us how much you have available to put down. There are quite a few other products available now, as well as those conventional, adjustable, and fixed mortgages. I have a lender who will do what we call kind of a version of a bridge loan, where you can buy before you sell, and they allow you to take out the existing housing payment from the calculations, what we call the debt to income ratio that we do. There are lines of credit. If you own an existing property, we could potentially tap into that for a down payment on a new property. If you're older, we have reverse mortgages available, and I have a couple of great sources for private money, even depending on your situation. We go to the next slide. Well, I know what's on the next slide, and it talks about getting pre-approved, and it's been mentioned earlier in the process. So the pre-approval process is essentially going through a mortgage approval without a property. So we get all of your information. There's an application that you can do online, and it asks for basic information. Who are you? Where do you live? How long have you lived there? Where do you work? How long have you worked there? Social security number, date of birth, etc. So your identity can be verified. And regardless of how many borrowers, we get all of that information from all of the borrowers. At that point, we request documentation. And the application is important in terms of driving the documentation, because perhaps you own a business, so we'll need a specific kind of tax return, or you're married, or you used to be married, or you're unmarried. So that tells us, what kind of documentation we need about that. Maybe you're not a US citizen, but you're here on a visa. So again, that tells us about documentation we'll need. Maybe you have other assets that are in a trust. So we send you a complete list, or as complete as possible list of documents. All of this can be done online. Log into our secure portal, put in your information, and then upload those documents through the secure portal. That doesn't work for folks, we can always work something else out. Once you have that approval, you go back to your realtor, Nathan or Letty or Emily or Lawrence, and start shopping for properties, because at that point you have a budget. You know how much you can spend. That's not to say everything is carved in stone. It's a bit of a fluid process, because rates can change. What you put down may fluctuate. The property may change the loan itself a little bit. There are over 30 factors that go into giving you a rate for your mortgage. And one of them is the type of property, whether it's a single unit, whether it's 2 units, whether it's a condo or a tenancy in common. All of those can impact the type of products that are available to you, as well as the rate that you'll get for those products. So we'll look at all that with each property that you look at, and I will generate for you a letter specific to that property, because as you can see in the slide that's now appeared, a pre-approval letter is very important, and one that's customized to your specific offer, I think, is incredibly valuable, because first of all, it shows that your mortgage professional is engaged in the process and that you're in touch with them and they know what's going on. Secondly, if you're pre-approved for more than you intend to offer, you don't want to tell them that. That's like showing your hand in cards. You know, you want to keep that close to the vest. So we work through that process together. As I believe Nathan referred to earlier, you don't have to have 20% down, perfect credit. You don't have to be a model borrower to get a loan. There are products available that allow us to do loans for folks with lower credit scores, loans for folks with lower down payments, or a combination of the two. Self-employed individuals and investors. We have products for investors where you don't have to provide all that documentation. We do the loan based on the income generated by the property. So tons of different options are available, and that's why it's important to talk to someone with experience who knows what those options are. The other thing that's important is when you do find a property. In fact, I'll give you an example. Just over the weekend, we got into contract on a property, and the listing agent had indicated on the MLS, multiple listing service, that no one should use the back stairs. Now they got 2 other offers with loans attached, but no one had asked him what's up with the stairs. So he and I had a lovely conversation on Monday, on Friday afternoon, and he said, well, there's parts of the stairs that may or may not be safe, so we don't want anyone to fall, which of course none of us do. And I explained to him that that's a health and safety issue, and lenders will not lend on properties that have health and safety issues. And I said, so for 3 reasons. One is, well, you have 3 issues here. One is that the lender won't lend on it, and the appraiser will call it out. It's in the MLS. 2 is, not only if going up and down the stairs are a problem, but if you can't use them, you're diminishing a path of egress in the event of a fire. And the third thing was, if the appraiser comes, doesn't know anything about this, which would be unlikely, but and falls down the stairs or falls through the stairs, well, then you've got a lawsuit and a much bigger problem on your hands. So that's just to underscore the importance of having a professional that you work with, just like your realtor, who knows what things will trigger a problem in a transaction, and as Nathan said, get you through the process as easily and pleasantly as possible. Let's see. Let's go to the next slide. Talk about the elephant in the room, interest rates. So we're usually, generally speaking, in the 7s right now. That's just where we are. There's always an option of buying down a rate, meaning you pay a point, or you pay a fraction of a point, or even more than a point, and you get your rate a little lower. But here's the real crux of the matter. As everyone else has said, when you have less palatable conditions, you will also have less competition. So in the condo market, you have lower prices. In the single family home market, maybe not so much, but at the end of the day, you have less competition. You're more likely to get your offer accepted because of the current market. So as we say in my business, marry the house, date the rate. When the interest market changes, then we can refi you out of the 7% loan that you have into something lower. I have a list of about 8 different mortgage executives and economists. I won't read all of that to you, but essentially the forecast is next year we should start to see rates moderate and come down a bit, probably into the 6s at least, maybe the low 6s, and even by 2025 they're saying we could possibly get back into the fives again. So I do see that as hopeful information on the horizon. And if you could go to the next slide, and then we might pop back to this one. So whoever's on that toggle, just bear with me. You can see a 30-year history of mortgage rates here. Focus on the orange line. That's the Freddie Mac 30-year fixed mortgage over the last 30 years. You can see in the early 90s, they were in the 10% range. And I started in this business around 2002. We were in the sixes and fives most of the time. We were happy when we were down in the fives. And then you can see the whole market melted down around 2009. And that's when we started to see this decline that continued through 2020, and then the pandemic hit. And so for a minute, rates ticked up a little bit. The market got really tight. Lenders got very constricted. But then in the rest of 2020 and into 21 and 22, we went down into territory that we haven't ever seen, where you had 2 and 3% rates. Those days are gone. I'm sad to tell you, they will probably never come back unless there's some other mad catastrophe like a pandemic. So we have to adjust our thinking to what the current market is. And I don't think we'll stay at 7% forever. Like I said, reading what I'm reading and reading the forecasts I'm getting. But it does depend on a lot of factors. You'd be surprised what impacts mortgage rates. But it's the bond market that's driving them, and what impacts the bond market can be anything from the government to a war to some sort of natural disaster. So again, it's an opportunity, just like everybody else has said, it's an opportunity to get into the market. And that's what I always say. The most important factor is to get in the game. The most important thing about closing your loan, not the rate, is getting it closed. So with your team in place that knows what they're doing, you can get that, you can make that happen. Let's go back a slide if we could, please. Since you're going to be pre-approved, you as a borrower are already approved. That's the property that needs to be approved. That's why that appraisal is important, and knowing what to look for in terms of potential issues is important. Your monthly payment is based on your actual loan amount, which will be some percentage of your purchase price, and the current rate. Unfortunately, normally fixed rates are a little higher than ARMs or variable rates. Adjustable is really the term we use. So adjustable rate mortgage, ARMs. Not seeing that so much right now. So there's not an appetite apparently in the bond market to buy those loans. That's again what drives what the rates are. But that's what we look at. What are our best options and which one works best for you? Working with the woman who's buying the house with the stairs, and she wanted to put down a lower down payment. And with 2 units, it had to be an FHA loan because conventional loans require 10% down. So, you know, we shift and work out the specifics of every deal. And I tell all of my clients, when you find a property, let's talk. Let's get all the specifics. Let's find out from your realtor, Lawrence or Letty or Nathan or Emily, what they believe you need to offer to make it work. And then we put the calculations in and figure out what the best options are for you. And I shop the rate. As I said in the beginning, I'm a broker. So we work with over 30 lenders with all different programs. So we look at what works for you. I think that's probably good because people are probably starting to get a little antsy. And I'll wait for questions, whatever is popped into the question and answer box. Thank you for your time.
So we are going to save the best for last. And by that, I mean, there is a really good program that you probably haven't heard of that would help you get to a place where you can't afford to buy a home. And that is because the city of San Francisco, the city and county of San Francisco would actually put a down payment on your behalf, a very sizable down payment that doesn't require any interest as well as any payments until you actually sell the home in the future. Now, all that being said, there are some things that Emily can dive a little bit deeper into. Before I do hand things over to Emily, I do want to share something that Nathan, Letty, Emily, and I have seen over the past X number of years we've been doing real estate, which is, it is true, it's not anecdotal, that in a buyer's market, you have a better chance of buying a property, right? In the seller's market, which the seller's market has been around for the past 10 to 15 years, you might try to buy a property with financing and you always lose out to the cash buyer, to somebody that is in a better position. With a buyer's market, you do have the flexibility to get into a contract on a home or a condo where the seller just doesn't have any other offers but yours. And so that's why it's a really good opportunity to think about buying now versus a time when there is more demand and there is more competition. So Emily, why don't you tell us, how can we get a nice down payment that's free of any charges, interest, and things like that? What is that? What is that magical program?
Yes, if you want to go to the next slide, I'm more than happy to explain this really, really cool program that San Francisco has, and I don't think a lot of people really know about it. It's not a really known thing, and it's especially relevant in today's market. But essentially what it is it's a down payment assistance program. And as we know, in the Bay Area, having the money for the down payment is typically one of the biggest barriers for entry for homeownership, right? And so a lot of folks don't have the funds for that. And so this program is really interesting the way it's set up. As Lawrence mentioned, it's basically a deferred payment and there's no interest. So as Donna was explaining, the way that the market is right now with interest rates and everything like that, this is a great opportunity to get a loan that maybe you would have to get otherwise, but have to pay interest on. So essentially, let me see. What happens is the loan balance amount plus a share of the appreciation becomes due when the borrower sells, rents, or transfers the title. So basically, you can essentially take the down payment if you're lucky enough to win the lottery, and you can essentially not pay anything until you decide to sell the home or pay it back within 30 years. So it is a really flexible program. And you also can pay it off in payments if you'd like. And there's no prepayment penalty fees as well. So it is a really flexible program in that way. And if you decide to stay in the home for the rest of your life, you can do that as well. You just pay it off after the 30 years and you own it outright. So that's why it's a valuable program. I'm going to go through who is eligible. So if we can go to the next slide, and then I'll kind of go through some of the requirements for the application. Of course, as you can imagine, it is a little bit complicated and there are a few steps you have to take in order to be eligible for the program. So I'm just going to go through a few of them, but if anybody's interested or knows anybody that would be interested, I'm more than happy to speak to them further. And I know Donna as well has worked with this program in the past too. But essentially, some of the most important factors for who's eligible. So first-time home buyers, there is one caveat with that. So you can have owned property in San Francisco in the past. So it just has to be within 3 years that you haven't owned any property. But really, this program is meant for first-time home buyers. And the household income, so that's the other bucket that this falls into. And there's actually 3 different buckets that they have. One is for the general public, one is for educators, and then one is for first responders as well. So those are 2 kind of unique programs. If you know anyone that is an educator in SFUSD, this is a great program for them. Essentially, if you think about it, those pools are much smaller, and so the likelihood that you're going to get picked in the lottery, it goes up much higher. But there's 2 different buckets for the general public, and those are related to income requirements. So I'll go through those for what was given out for 2023. So essentially on the right-hand side, you can see the available funds. So it is a decent amount of money that the city is putting out for these programs. $6 million for general public in each income requirement, and then also 3.7 and 2.2. So it's a good amount of money available. And you'd actually be surprised who would be eligible for this in terms of an income perspective. So last year for the 120 AMI, and AMI stands for Area Median Income. So essentially what folks are making in the area. 120% is 121,000 for an individual, and then 138,000 for 2 individuals that were going in together on a property. So that's a decent amount of money, right? And I know that in the Bay Area, salaries are a bit higher, but this really opens the door to a lot of people. I don't know if you guys have heard of the BMRs, sorry, below market rates, but those have a lot more restrictions with income, whereas this is available to a lot bigger group of people. And the other group, so the 200% AMI, that's $201,000 for an individual and $230,000 for dual. So again, it's quite a lot of folks that it covers. The other thing to note is the borrower cannot have any more than $60,000 in liquid asset after the transaction is completed. And so the whole thought process behind this is that they want to reserve the funds for people who really need it and really don't have the funds saved up to purchase a home. But that's part of the process, and you would go through that with a lender in order to make sure that you would qualify for that. On the flip side of that, you need to make sure that you have enough funds for 2 months of reserves. And what's included with the reserves would be your principal interest, mortgage insurance if you would need that, property taxes, insurance, and HOA if applicable, if you were buying a condo, for example. So those are kind of the eligibility. There's a few more. There's a really helpful handbook that I found online. So if you guys are interested, I can send that over to you. My contact information will be at the end of the screen once we're done presenting, but has really everything from A to Z. So any question you might have, the answer will be in there. But let's go to the next slide and I'll talk a little bit about applying. So what's really great is there's no fees to apply. So the only time you would pay a fee is if you were selected through the lottery. And that's done essentially when you get into contracting and going through escrow. Last year, the fees were about $668. So all that being said and done, for you to be able to get an interest-free loan for your down payment, that's a pretty good deal. And then the other 2 requirements are you must complete a home buyer education course, and you must have your primary financing taken care of before you go ahead and apply. So a little bit about the homebuyer education. Each person who would be on title must attend a homebuyer education course, and they're available throughout the city, different locations. And it's about 10 hours combination. And it's a one-on-one sort of counseling, as well as group sessions. And once you complete that, it's valid for 12 months. And so I put a little chart here at the end so you can kind of take a look at timeline. So of course, you're going to need to do this ahead of time. And so that's sort of one of the reasons why we wanted to talk about this today, is because deadlines will be next summer. And so if it's something you're interested in, or you want to talk to some of your friends, family members, whoever about it, it really gives you enough time to get all your ducks in a row and take the course, talk to lenders, and get all your finances in order, because it can take quite a long time to get all the required paperwork and certifications. And then primary financing. So you must be able to qualify for the first mortgage on an approved lender. Donna is available, and we have contacts as well if you wanted to speak with a lender. So yeah, that's pretty much it. I guess the only other thing would be to keep in mind is if you are selected through the lottery, you have 90 days to get into contract. So it gives you about 3 months to shop around and take a look. And based on what we were talking about earlier in the seminar, now's a great time because buyers have the power. And in a hot market, it's possible that a seller wouldn't entertain something like this. But right now, it's a great time and really a good time to take advantage of this program. So yeah, if you had any questions, please reach out.
Thank you
I'll
so
just
much.
add
Emily.
on, if I could, to Emily's great presentation of the DALT program. There are also state programs which I work with, like Cal HFA and the DREAM program. So those are also down payment assistance programs. And there's a third one called Neighborhood Lift, which is forgivable. So it's a little tough to get through the phone system, but if you do, that loan doesn't have to be repaid if you make your payments faithfully for 5 years. The rest of it is forgiven. So there's few options for down payment assistance, which is great.
Thank you so much for sharing that. So there
Sure.
are a lot of options out there, is what I'm hearing. One thing that came to mind as Emily was talking about is you might think, wow, a $500,000 loan, I have to pay that back. Well, think of it this way. If you purchased something and you had a $500,000 down payment and you sold the property, you would have the funds to pay back the down payment, because that's how you used the money to purchase the home in the first place. So the big X factor there is you don't have to pay any interest. So 500,000 now is going to be the same as it is in 30 years when you purchase it in the future, or when you sell it in the future. You're still going to have to pay 500,000 back. Obviously, make sure that you pay attention to what Emily said with the appreciation. It is shared appreciation. So the city and county do want to get a piece of the appreciation as well, but that doesn't mean that you won't get something as well. So thank you for sharing. I think that that was a good gem to share for a lot of people that aren't familiar and don't realize that there are programs out there, and the government, as difficult as the government can be sometimes, they are looking out for you guys, and they do want you to enjoy home ownership and being able to provide programs like DALT to facilitate that. But just remember, you do whatever it takes, whether it's a DALT program, whether it is trying to get financing, trying to identify the right home, the right value. You do need to work with a professional, and the folks today are great individuals to work with that know all the details of all the topics that we talked about. As we wrap up, I want to say thank you to everybody that is either watching this later on or attending today. And a big thanks to each of our panelists for sharing a lot of information, a lot of great information about the current market, about home ownership, and about the financing and down payment pieces that would play into home ownership. So thank you again, everybody. Please take care, and hopefully we'll see you soon at our next webinar.